So yeah, I thought I'd just start out with a bit of a blanket statement in response to the question. I actually do think that the availability of private capital is crowding out the IPO market. I think less regulation and the introduction of the 2000 investor rule that was introduced by the SEC in 2016, combined with the ease of capital sourcing from an ever-increasing amount of large and sophisticated venture capital firms and accredited investors and investment funds, have created a haven for companies that have no need to go public. And this is because there's less documentation and requirements for auditing and involvement with the SEC when you're a private company. That's kind of all that I had from my research. If anyone kind of wants to agree or disagree or chat about that, then
let's actually back up for a minute. I think some of us have some pretty good business and finance background, and some of us have some pretty good economics background, and some of us have neither. So when we reference crowding out, what do we mean by that?
I took it as I didn't take it in a financial economic meaning. I took it out as it's kind of the private capital market is crowding out, as in it's keeping people out of the IPO market.
Okay. What other expansion might some of the rest of you that have some good economics background offer to that description?
I personally take it as it's more attractive than the IPO market, at least for investors.
So that's interesting the way that you say that, Gary. So when we think about crowding out, there's an issue of there's only so many investment dollars that might be needed in any given marketplace, perhaps, and when there are more dollars chasing those opportunities, then it bids up prices, and when prices are bid up, then returns are reduced, and then players may not want to enter the space, right? And so we can't ignore that issue here. So now I'll go back to you, Ben, and have you discuss this just a little further, because frankly I think you might be right. So from that perspective, what do you think's going on here? You're on mute.
Sorry, I don't think I fully understand. Could you reiterate?
So you said that you think that the private capital markets are crowding out the IPO markets.
Yeah, I think companies want to stay private.
Okay. Is that a crowding out effect, or is that a preference that they're able to pursue because of so much availability of private capital?
Oh, okay, so then it becomes no, but because of the same reasons.
Yeah, maybe so. So I'm really curious to what you guys might have to say about this. I'm gonna throw something bold out here, and I don't know that I necessarily agree with this or not, but I think it's worth us thinking about as we debate this issue or talk about this issue. So the IPO market, long the sexiest part of finance, long held as being a place where fortunes can be made, not only by those people that are helping execute the transactions, but when Donnie wants to dream about the private island that he has in the Bahamas, or he's going to have, it's because he's going to be able to drive or fly his Learjet there after having taken his company public and having gotten these gazillions of dollars from that multi-billion-dollar IPO. Right, Donnie? Yeah.
Well, yeah.
Sure, because Donnie, like the rest of us, is a capitalist pig and proud of it, right? And by the way, Donnie, when I say that, it's a compliment, so don't misunderstand the comment.
Thank you.
So we all understand the IPO market. We've been dreaming about the IPO market if we're entrepreneurs at any level, and we want the huge accessibility to capital that comes when you have the billions of people on the planet all able to invest in your firm, which can only come in the public markets. Those billions cannot all participate in investments if we're in the private markets. So with that said, I'm going to say that there's such a wide appreciation and understanding of the public IPO market that people want to be there as owners of firms, and people want to participate in it as investors. So it's kind of like this loyalty network effect issue almost as a barrier. Is it conceivable that private capital, which is only able to be participated in by a scant percentage of the population, is it conceivable that that private capital market can overshadow this thing that we know so well, that we've dreamt about for so long, and commands such extraordinary resources?
Yeah. Rick, could I make a comment there?
I kind of thought you might, Jaden.
I would say that in the last few years, from at least my interactions with people, private equity has become more sexy. Private equity, you know, when you throw around, if some of us are financiers here, and I just think about the fact of, as a finance person, having something on your resume that says venture capital, private equity, it just pops out. It's just like, ooh, wow, look at that. Look, this person knows what they're doing. They were involved in private equity. And so I think some of that dichotomy that you're talking about, I think that is, to some extent, shifted a little bit to the private equity and private capital markets, where we're seeing this trend where people are starting to see the sexiness of the private capital markets. And then just to that point, directly speaking, there has unquestionably been an incredible amount of money in the private market, more so than IPOs recently. Like, if you look at the numbers of the amount of money raised annually through private offerings to public offerings, there seems to be a wealth of money sitting in the private markets to be invested.
I have a comment about that, if I may.
Yeah.
So I like that comment a lot, and I was kind of reading about this earlier, and it's interesting because the opposite was happening in the last, I want to say, couple of years, because after 2017, interest rates were very, very good. And when interest rates are good, when they show the opportunity of a high return, then people are not going to want to do private investments, right? And it's interesting that the opposite is happening. And I'm kind of curious, maybe you, Rick, you want to answer this. I don't know. Why is it the case that private investing is kind of being more attractive when, at least last year, interest rates, if I'm not mistaken, were great?
Well, yeah, I mean, interest rates are, from my perspective, unbelievably low. And from the short bit of history that I've lived, interest rates right now are just so low that they're just terribly attractive. But that would also mean that if I'm an investor and I want to go out and invest in Lopez Enterprises, I could go and borrow $5 million. I might only pay 5-6% on that money, and which means that my hurdle rate or my required return, in order for my experience to be positive and productive, my hurdle rate's low also. And I think that's part of what you're referencing, Gary. So, but even with that low hurdle rate, that we see a tremendous amount going into vehicles that have promise for yet greater returns. Well, why is that? Why do we not see a flight to safety since we can get relatively safe returns in the IPO market, right? Isn't the IPO market safe?
So I would like to comment on that. Well, also when we're looking at public market versus the private market, I think it's also a privilege to be investing in the in the private market because it's not accessible to everyone. However, I would say that it's safe to go to the IPO market, and for some it might feel unsafe to go to the private market because of the limited information that is available on the web and for the average Joe to say, because when you think of the average Joe, that where they're investing is usually in mutual funds and funds that are investing in private in public capital. However, there's also been an increase in funds that are accessible to average people and that invest in private capital. And I think this is also a combination of having more cash availability in the markets, because we can see that over the years the amount of cash has grown, and public institutional investors need to find places where to put that money into work. So I think that's then fueling the private market growth for investments. But I wouldn't say that the IPO market is safer than the private capital market. I would just say it's a different component in terms of how do you do your research in terms of what you're investing in, and that requires a lot of talent and knowledge in order to do so, to invest in the private held companies rather than investing in some of the publicly traded companies.
Okay. So what percentage of IPOs show positive returns after the first year? Victor, I think you actually know that number or something, or an approximation.
Sorry, can you repeat? You were breaking up a little bit.
Yeah, sorry about that. What percentage of IPOs show positive returns after the first year? Any recollection?
Yeah, it's pretty high. I mean, usually during the first day they have an increase over 10% because they're pricing themselves under the value. But I think it's about the percentage that are positive after the first year is about, is it maybe 70-80%?
Yeah, and I was thinking that the number you had shown me a few weeks ago was 64%, but still, it's a majority. And what percentage of individual companies that receive private capital succeed?
Very few.
Very few. Yeah, it's like 1 out of 10 will succeed. So obviously the markets are way more risky than the IPO market. But then again, I think it's a component on in what stage you will going to be investing in the company, because it's if you're investing in the seed phase, well, obviously there you have a higher risk on defaulting your investment because it might go bankrupt. But then again, when you have publicly listed companies, the risk of the company going bankrupt is less than investing in the private market. However, we come again then to the dilemma that when you're investing in the private capital market, then you obviously have the availability to make greater returns there, but then again you have to pay a premium for it.
Okay. What other comments would you guys have?
Can I add to that, Victor? Because wouldn't it be a huge factor too to like stay private? Like in terms of staying private, they're like getting away like they're having more freedom to operate without having external shareholders input and stuff like that, regulations. They have more, in general, more freedom. And I'm not sure, but does it cost less as well?
Yeah, I mean, because when you're a publicly traded company, you obviously there's a lot of legislative issues that you need to have, and obviously when you have legislative issue, they tend to cost quite a bit. So I mean, Jaden knows this area probably the best of us with the Jobs Act that how this works. So I think Jaden, you should contribute a little bit on this one.
Yeah, I just think generally there's obviously being a public company has a lot of direct compliance costs, but it also, as you mentioned a little bit, has a lot of opportunity costs of increased scrutiny and accountability to shareholders and stuff like that. So overall, I think most people, this isn't a universal thing because there are advantages to being public, such as access to public debt markets, and generally public companies are more well-known than private companies. But generally, I think most people would say conventional wisdom says you stay private until you can't raise enough capital in the private market, in private markets. And as soon as you run out of capital in the private markets, you go public. That's not universally true, but I think that's commonly accepted as standard.
Okay, so the IPO market would never really disappear. It was it's really fundamental, if I can put it that way, for a business, as it gives a lot of opportunities and an additional way to grow and access capital if you don't have the contacts and network in the private one.
That's probably fair to say, Henriette. Think of the public market as having virtually unlimited access to capital, whereas the private markets do have some limitations. If nothing else, because of the limited number of people that are able to invest in the private market because of those regulations that Jaden and Victor are referencing, and because of a not literal but virtual unlimited access to potential investors in the public markets. Any Tom, Dick, or Harry that can put together an investment account could be a public market investor on an IPO if they were able to get such. So Noah, you just sent me some numbers that you thought were interesting. What do you have to offer here?
Yeah, they're kind of worrisome. I'll screen share just so I can show other people the numbers. Let me. I think that'll do actually. So just like this little box. It's just kind of worrisome that IPOs are kind of only used to give companies that were once private liquidity once they're large, which kind of means just like the regular investor doesn't get to join in on a small firm anymore and like ride up with them. They kind of just start joining in once they've kind of stopped growing so fast, you know, because large firms can't grow at the same rate that small firms can. So you can't get like the same kind of returns. So lots of
is it that large firms can't grow at the same rate? Or
well, it's easier to double something small than to double something large.
Okay. I'm not sure the scale is the issue. Is the issue possibly that the private markets extract as much capital as they can and returns before the firms finally relegate themselves to the public market?
Yeah, that's kind of how I feel. I feel like most the returns, most like the big returns are while it's still private, and then they go public once they're large, and then the people want to like get some liquidity so they can actually get their investment back.
So,
and that kind of just like skips out the small investors.
You would subscribe to the Thomas Piketty philosophy that tremendous wealth inequality is occurring because of the growth of private capital.
Yeah. I kind of agree with that.
Okay. Any comments about this, Jens? Just kind of nodding your head here and there a little bit.
There we go. I was struggling with the unmute button. One thing I was thinking about, I agree to many of the things that are being said, but one thing to think about is institutional investors and endowment funds and that kind of stuff that we have covered. They always monitor their portfolios, right? So they have one part of their portfolio is public assets and one part is fixed income and another part is alternative investments, and that's usually private equity. And they place that into private equity funds. So when you have a good run in the public markets, the value of that portion of the portfolio rises, and you need to put more of the capital towards private markets. And that has happened more or less since 2008, that private equity funds and venture capital funds has gotten more of that capital. So that's one thing I wanted to mention.
Just because of trying to balance the portfolios, keep a certain allocation.
Yes.
As the S&P and Dow have risen, we've seen that become necessary, not just because of the IPO activity, and maybe not hardly at all because of IPO, but the private capital structure benefited from that. Okay. So any final comments? We're just about out of time here.
Okay. I think the one final comment I would just like to throw out is this is a extremely complex thing, and I think it is certainly bold, and I don't know if I would be comfortable fully subscribing to the declaration that increased capital availability in private markets has caused a dearth or crowding out in IPO, but I certainly would think it's a contributing factor, and it has at least allowed that to happen. It's opened up the opportunity for some of these other impacts, such as returns, or maybe even, as Jens said, shifting of portfolios. And it's an allowance relationship as much as a causation relationship.
So maybe you're agreeing that there has been crowding out, but you don't know that it's the primary cause.
It might be, but it might not be.
Yeah. And I'll go a step more bold than that and suggest that I think it's the primary cause.
Rick?
Yes.
Yeah, of some articles that I read, I feel like the problem is like, so venture capitals and private equity firms, they want their company they're invested in to have high valuation when going into IPOs. So that's why valuation are higher and higher, and like all companies are, like not all companies, most of the companies are overvalued before, like for the IPO. So I don't know. I found that's kind of like a cause for that. So like, because these private investor, they want the company to have a high valuation before going on the public market. They will keep the company private as long as possible, and then they will overvalue it. Then the company is going to lose value when the company is going to be on the public market.
Well, that's exactly right. So now you're coming back to Noah's standpoint, but you're right. The companies will stay private longer to get valuations higher, and whereas 30 or 40 years ago, my company happened to have been the beneficiary of private capital, I probably expected that as I exited, or as we had our next exit, it would be to the public markets. Whereas now our next exit may be to a private capital company, and into another one, and to another, before we ever hit the public, extracting as much potential profit out of this as we could as it's in its highest growth phases, because Victor is right, or maybe it was Noah that said this, it is simply harder for a bigger company to grow than it is a smaller company. Well, guys, I appreciate the discussions today. I appreciate your questions and the presentation. You've done an excellent job. Jens, any final comment before we close here?
Only that I was very impressed with the 4 groups that were presenting today. So you did a very good job. I was a bit nervous if the guidelines were good for you, but it seems like you understood it, and good job to all of you. So if you have some feedback, that's any of the groups, the 4 today and the 3 next on Wednesday. If you have some feedback, please send it out on the group or to me or Rick directly. Happy to get any feedback to improve it further for next time.